What's up, everybody? Zach is back with another episode of Journey to $1 Million. And it was a day of getting closer to $1 million. Actually, we're making pretty good progress, and to tell you the truth, hopefully it's only a couple months away. That's what I wish, to tell you the truth, but who knows? Yeah. According to Market Watch, we're in the middle of the tech dip, even though I feel like kind of rebounding a little bit. I mean, most of the big indices and ETFs are past the 50-day moving average again, which it's always good news. But let's go ahead and take a deeper dive into this. S&P was up 1.44% yesterday. Triple Q was 1.67. Dow Jones was up 1.13. And my personal recent picks was, of course, Soxel was up a bunch. Tekka was up a bunch. Tesla was up a little bit. Nothing too surprising there. I mean, the Soxel is the 3X semiconductor ETF, which it's 6.4%. I mean, semiconductors are short, and actually Market Watch is telling us, even though we're in the middle of a tech bubble, don't buy the tech stocks yet. Stay away from the FANG stocks, but you can buy semiconductors, especially the legacy ones, like Intel. But hey, I cannot really say that that's necessarily a bad idea. But even the 3X Tech is up 6.47%, which is a hair more. Tesla had a really good data come out with the sales, just blew everything away. So that's always good news. As someone that has 100 shares of Tesla, it's a decent amount of money, so I feel good about that. Not to mention all the exposure through the ARK ETFs, but nevertheless, it was a long weekend, but we came back strong, up 6% yesterday, so feeling pretty good about that. I mean, that's literally the third really good day that we're having here. Oil's not doing good, which is surprise. But anyways, so yeah, it was like the third really good day. So that's always good to see. We'll see what's going on. I mean, actually, Triple Q was up in the pre-market barely, but it's something. And so is Facebook, which we're about to dive into. Dow was down a little bit pre-market, and let's see. Here's pre-market. Oh, we updated. Okay, cool. Yeah, Soxel's down a little bit pre-market. S&P's down a little bit pre-market. Triple Q is actually up. And energy's pulling back up a little bit. But that's, of course, from down yesterday, being down 10%, 5%. Nothing crazy. I mean, the Tekla and Soxel was up 6% both yesterday. So, I mean, it's nothing like too surprising here. To pull back a little bit, not be doing so well. Financial sector is also not doing so hot. And then let's take a look at the ARKs really quick. My BJK gambling ETF, it's doing all right. Yesterday it was 1.5%, and currently in the pre-market is up 1.2. Some of the EV ETFs and my ARK X is doing all right. The Chinese Triple Q is up a little bit. ARK K 0.3%. More interesting is the Tesla for me though. So let's look at that really quick. And yesterday it was up a lot, and yeah, just a little bit now. So it seems pretty good to me, but of course nobody knows until you know. But nevertheless, let's move on. So yeah, I wanted to point out that most of the important things, I guess you could say, are past the 50-day moving average. Tesla is still not. That's why I think this is a key buy. I don't really want to be one of those guys that's like, oh, this is going to be the last time you're going to buy Tesla below $700, but I mean, hopefully it's the last time until the next split. But anyways, I think it's a good buy. I think Tesla is a good buy below $700, below $600, even a better buy. And we've been saying it here, keep buying it more and more. I mean, really, just the more the merrier. In my opinion, I think it's way undervalued, and that's might sound crazy to some people, but I have my reasons, and this is not a Tesla video. But I do want to point that out, that a lot of things, including Triple Q, Soxel, Triple Q, the 3X ETFs, the 2X ETFs, a lot of the things are moving past the 50-day moving average. So of course we want to see it hold the 50-day moving average because it's definitely a key support level, and not to mention the flipping of the super trend. So let's take a look at that really quick, and we'll just use the Triple Q as an example. The super trend did flip yesterday. So that's always good to see. So technically we are in a bullish cycle on the super trend, and if you see before, we can just go back in time some some period. This was starting in April 2020, so that was right after the corona. Might not be the best example, but let's just use it. So it flipped here on the 13th. It was around $202, and then it flipped back here. So you would have sold it, $298. So that would have been a good 30% profit right there. And then wait for it to flip back was here. You bought in at $285. This one wouldn't have been good. Would have probably sold out at what, $282. So a little loss there, nothing major. Bought back in here when it flipped around $293. Sold at $233. Okay. But anyways, you get the point. That's what the super trend is for. I always like using the super trend on the day. Although, to be honest with you, I don't really use it to decide my buying and my selling. Although it could be fun to try out. Just only go off super trend. It could be good for swing trading, that is. But I do like to look at it because I think that it's pretty accurate. Of course, the one time that I do it'll be the time that it's not accurate, but it is what it is. So yeah, we are in a bull trend on this, a bull cycle on the super trend. So it'll be interesting to see which new highs we're going to get, but I do believe that we're going towards 350, I think, on the triple Q. Could be an interesting time to pick up some vertical spreads or even just some long calls. But I am definitely interested to see how far we're going to go this time. And nevertheless, Monday was a really good day. The TNX was still more or less flat around 1.7. There's nothing too major going on in the TNX. I mean, it shows it was up 2.4%, but don't be too excited about that because it's mostly been trading flat since the 17th of March, which it's 3 weeks now-ish. So, yeah, up to 1.75, down to 1.6. So, I mean, it's in here somewhere. We'll see how it goes. Of course, we're going to keep watching that as well as the QQQ. If you're heavy on tech, you should be watching that past the key resistance and whatnot. But one of the biggest catalysts is these non-farm payrolls. They added 916,000, which 666 was the expected in February. Unemployment, it was 6%, which is down from the expected 6.2%, so that is good news. A lot more jobs coming up. A lot of companies are hiring, I'm hearing, even though I'm not looking for a job personally, but I hear if you want to get a job, it's not hard to get a job right now in the States. I think it might be easier for blue collar versus white collar, although I'm not too sure on that, but it seems like that right now. There's going to be a lot of the infrastructure projects, of course, with the infrastructure stimulus and whatnot, but the salaries are about the same, hourly earnings, month over month, year over year. It's not a big difference, but the unemployment is going down and the jobs, adding a lot of jobs in the economy, so that's always good. And there's a quote from Larry Adam from Raymond James Chief Investment Officer. There have been a lot of false narratives out, and I really love this quote, by the way. This is kind of what I've been preaching, although of course I'm not as notable as these chief investment officers. But this is what we've been kind of saying and buying the dip. And who's buying the dip? Let's take a moment to celebrate and pat yourself on the back if you've been buying this dip and not listening to the garbage CNBC and all this the trash talking heads and whatnot. Pat yourself on the back, and while you're at it, smash the like button if you've been buying the dip. But let me just go ahead and read you this quote. I really liked it. There have been a lot of false narratives out there that the interest rates were going to take the markets lower, that inflation was going to scare the markets, the Fed, and the realization is that the economy is doing very well. I think people are going to continue to see the strength of the economy during the summer, and you're going to see earnings continue to move up significantly throughout this year. So, I mean, I really think there's a lot of false narratives. I mean, literally 3 weeks ago, the garbage CNBC and garbage trash talking heads, they were telling you to sell all your FANG stocks, buy these old, dated, tired, worn out Dow stocks, these cyclicals and energy and stuff. Energy's been doing all right, can't really hurt, but I mean, we should be looking towards the future. Get, as Kathy Wood says, get on the right side of the future for investment and stay there. Don't want to be trying to switch, and because the more things you do, the more possible mistakes that you can make. So I always say, and at least that's the lesson we learn from these dips. Cut your short-term positions out. take the money, put them into your dollar cost average, into your longer term positions that you're comfortable no matter what for 5-10 years in those positions. And you can't go wrong. You literally can't go wrong. I mean, you might need to go on a walk and get some fresh air some days, but cut your options out. I almost didn't do any options through the dip. Of course, we will start into this more now, but nevertheless, we will see what's going on coming up here. Remember, according to Market Watch, we're still in the middle of this tech dip, so we will see. We will see, but that's okay. We will be buying the dip if more dip comes. But to be honest with you, things are looking greenish in the pre-market. I mean, we've literally had such a good 3 days here that I'm not surprised if it pulls back, and I'm happy if it pulls back a little bit. So yeah, we're looking pretty good. So remember, there's a lot of false narratives. A lot of people I see saying online that the CNBC, I mean, they just want you to literally do the opposite of what they want to do, just to trick you, so then the hedgies make all the money. I don't know, it's kind of conspiratorial for sure, but in my opinion, the U.S. economy looks very strong. There's a lot of money being pumped in. A lot of jobs are going to be created with the infrastructure package, which I highly support. This infrastructure package. The U.S. needs it, and I think this is a great time, and I think it's the roaring 20s. I really do. But anyways, let's move on to Tesla. So Tesla, they predicted 172,000 for Q1, and they actually delivered 184,000. So I mean, this is, and the Wedbush raised the price target, to $1,000 from, I think it was only like $950, which is not a very big deal, but hey, it's something, and it moved up the price because of these deliveries. And I'll read you this quote. In our opinion, and this is from Wedbush, in our opinion, the Q1 delivery numbers released on Friday was a paradigm changer and shows that the pent-up demand globally for Tesla's Model 3 and Y is hitting its next stage of growth as part of this global green tidal wave underway. So, I mean, that's, super true, and I can see it. It's so evident to me just when I walk it down the streets in Shanghai, because, of course, China is the biggest EV market in the world by far. And, I mean, there's just so many Teslas here. You would be amazed. And the Model Ys just started hitting the street, but, I mean, they're hitting the streets pretty hard, I can tell you. So I feel very confident in Tesla. I think it's still cheap, in my opinion. Sounds crazy, but I do. And it's still under the 50-day. It's under $700. I mean, it was up to almost $950 a month or two ago. So, I mean, it's nothing crazy if it's going to get back up there. And, of course, Wedbush is a $1,000 price target, and ARK, what is it, like 35 or something like that? But, of course, that's over the next few years. For me, I think $1,200 end of year. Mark my words. But anyways, I put this at a risk of a 3. I mean, no need to harp on Tesla too much. And I don't want to be one of those typical FinTwit traders and commentators that just talks about Tesla all the time, because it's not the entire world. But basically, end of year, $1,200. Do what you wish. Calls, vertical spreads, leaps. Everything is interesting. Comments, whatever. Can't really go wrong here. And then the next one, it was interesting, was Facebook, because Facebook is actually coming out with well, let me just read this to you. The social media giant announced dynamic ads for streaming, which is a product that laser targets the growing legion of streaming video service providers. With dynamic ads for streaming, when people see an ad for your service in their feed, they can swipe through the ad to see personalized, relevant titles they might be interested in based on interest they've shown on Facebook and Instagram. So that's pretty interesting. I mean, I don't know too much about the marketing side and ad side of things, but obviously Facebook, it's most of its revenue is coming from advertisements, and Facebook is very good at advertising. So this is pretty interesting. The dynamic ads, you can swipe through on Instagram and see some personalized things. So that's the targeted marketing. Very interesting, and it gave it a little bit of a boost. But not to mention, the price to earnings is $27. So out of all of the FANG stocks, this is the best deal. So I think that's something to note. And I mean, for sure, it's been taken off the last couple of weeks, but I still think it's undervalued. I think a 350 price target is no problem. I would give it a couple of months, a few months, 2 to 4 months. Risk of a 2 because this is a FANG. I don't think FANGs are very risky, and Facebook is basically the king of advertising, with Facebook and Google at least. But if you can get it cheaper than 310, I think it's fine. Some sort of vertical spreads, calls. I think a 330, 350 vertical spread could be interesting. A dated one, that is. Give yourself some time. But yeah, I think that tech is about to push up, and so is the triple Q, Tesla, and whatnot. And I don't think that there's really any going back from here. In my opinion, most of the choppiness is probably over with. In my opinion, although of course, we're going to pull back in the past 3 days. It's just been really, really good. So I wouldn't be surprised if we pull back a little bit today, but I'm not very worried, and I never was really worried. And this dip was pretty dippy for the tech, and especially my portfolio, because I'm very heavy tech, innovation, and like the 3X tech and 3X semis and whatnot. But man, it was a tough one. But we're almost back all the way, and I wasn't all that worried. So I added about $100,000 to my portfolio, doubled down on a lot of those positions that I had, and I'm feeling pretty good. Things come and things go. It's very cyclical, obviously. This is the stock market, and forward looking. That's why I always think we should be going towards innovation and growth, because that is the most forward looking of them all, in my opinion. So, but anyways, guys, let me know how you're doing. If you're doing all right, if you're not feeling good, if you're feeling good. I'm actually feeling not very good right now. I don't know if you can tell, but I had taken a couple of days off, so I apologize about the lack of the content over the weekend. I was pretty sick. Still not feeling 100%, but hey, soon enough, go ahead and smash that like button. It's gonna make me feel better. It's better than medicine. And subscribe if you're not subscribed. We do videos like this basically every single day. I comment on my articles that I write. And let me know what other type of videos that you want to see. And please smash the like button. It makes me feel good. Anyways, guys, if you're interested, follow me on Twitter and Discord. I am feeling like I'm about to get into a lot of options, I can say. Shorter term options, weeklies and swings, something like that. I'm feeling it, because I'm feeling an upward trend, and I'm feeling like we're going to be making a lot of money coming up soon. Anyways, guys, see you on the other side. Peace.